Okay, everybody, it is me, Gregory Mannarino. It is still Wednesday, June 2nd, 2021. We have a lot to talk about. A kind of busy day here. Let me start off with this, and it should be no surprise to any one of you out here who has followed this blog. Today, crude oil continues its march higher, and we are now at multi-year highs with regard to crude oil. This is a trend that I've explained to you for quite a while, would continue, and it is continuing. I expect this to just go on exactly the way I said it would. Now, today, you might want to sit down for this one. There was a massive oil refinery fire in Iran, and that did put a nice boost under crude oil. Now, I'm going to give you one guess as to what sector of the market was the top performer. Energy, exactly, and the banks didn't do too bad either. If you are a subscriber to my free newsletter, there is a link in the description of this video. I sent out a little alert about this crude oil. I put up a nice chart there. You should all have it by now, so check your email if you are a subscriber to my free newsletter. I told you what you should be looking at here. Anyway, you should subscribe to my newsletter if you are a subscriber to this blog. You get a lot of neat inside information here and there. So today, the stock market finished higher across the board. Well off of the highs, though, and I'll explain to you why. But crude oil today is the story. We are knocking on that $70 a barrel door with regard to WTI, which is the one I follow, the kind of the one that most market guys do follow here. Let's talk about the 10-year yield. People, the 10-year yield remains stable. Crude oil getting a bit higher. The dollar reversed from getting a knee-jerk higher earlier to finishing just about flat. Despite that, gold and silver put on decent gains today. Cryptocurrencies pretty much across the board getting bid higher. Again, no surprise to you. These are not going to zero. I don't know who's telling you that. You should laugh at them, sincerely. That's what I do. That's what I've been doing since I've been hearing people say that since I think around Bitcoin like 1,000. Well, we're about 40,000 now, and I'm still waiting. Anyway, so that's the story with regard to the market, how things played out. But let me explain to you this real quick. We got a little bit of truth today from, believe it or not, a Federal Reserve president. And the statement made by this individual is why the market finished off of the highs of the day. Again, when a Federal Reserve president talks, the market listens, okay? And the market wants to hear more easy money, and then on top of that, more easy money. So Federal Reserve President Harker explained today that he's concerned about the pace of rising inflation. It's alarming. Okay, the market does not want to hear that. Now, he went on to say that because of this, the Fed should think about tapering. The Fed is not going to taper. Let me explain that to you. But the market, again, even a little bit of talk like this is enough to spook the market. So this is what pulled stocks today off of their high. Had this Fed president not come out with this little bit of truth here, I mean, it's astonishing to me that a Fed president, they're going to keel-haul him later on. Fed President Harker here is concerned, rightly so, about the pace of rising inflation. It's pretty extreme. It's pinching people. We have all kinds of issues associated with this, but again, you're not going to hear this. So once in a while, you're going to get a little bit of truth from a Federal Reserve president, and here is one. So, sir, my hat goes off to you. Now, I want to cover a couple of other things because I keep getting slammed with these meme stocks. Oh, Greg, you missed the boat. Oh, Greg, this. I don't trade these things. Okay, if you want to get into these things, do it. Okay, I told you already, I am a very steady player in this market. I like steady returns. Okay, yes, As a trader, my portfolio does this, but I don't want it to be doing this. You understand? You want to trade those meme stocks? Go ahead, leave me out of it. I didn't miss a damn thing, okay? People are going to make money here, and other people are going to lose money here. It's not me, okay? I am a steady player in the market, period, the end. Most of you should know that about me. So, again, please stop sending me these emails about these nonsensical, wild swings in these meme stocks. It's just too stupid. Let us move on here. Talking about the Federal Reserve. So today, people, the federal funds rate, we know the federal funds rate is set between 0 and 0.25. It came down today. We're almost at 0. That is interesting. Okay, in my view, number one, it's stock market positive. Number two, it's dollar negative. So as I have been explaining to you, the Fed wants the federal funds rate at 0. Okay, there's a lot of talk about being negative. Okay, the Fed wants it at 0. Oh, we're supposed to be in an economic boom, though. Imagine my surprise. I'm almost as surprised as the Iranian refinery fire. Shocked. I'm really completely shocked. No. This is the game, okay? But you're not supposed to know this. The Federal Reserve wants the federal funds rate at 0, okay? And this will, of course, be dollar negative. Bad for you, great for the Federal Reserve, people. You can't make this stuff up. Also, a big talk today on Fox Business, Bloomberg, CNBC. They are pushing the narrative, just like I said they would, about supply chain disruptions. And that narrative here, supply chain disruption narrative, is being blamed for rising prices. This was also on Yahoo Finance today. People, look, you can't make this stuff up. If people were to understand what's actually going on here, and that's why I rely on you, that this has almost nothing to do with supply chain disruptions, almost nothing to do with the rising cost of energy, although these two things are being blamed. Just people, you know, I said it right here on this blog months ago. I said that's what they're going to do. I wrote an article, a couple of articles for the Trends Journal months ago, weeks ago, outlining how this would play out, what they were going to do. They were going to blame energy. They were going to blame supply chain disruptions because you must be distracted. It's the Federal Reserve that keeps printing and adding digits to a screen, running their inflation machine. But no one wants to talk about it. No one wants to explain this. Have you heard one of our representatives, Congress people, talk about this? No, they're going to tell you it's supply chain disruptions and it's energy. They're not going to tell you that it's the Federal Reserve. So whose side are your representatives on? You don't have a representative. You understand that? This is not the United States of America either anymore. You understand? This is the United States of corporate America. The merger between corporate entities and this new American government, which started a while back, is complete now. All they're doing is fulfilling their end game. The central banks of the world, none more so than the Fed. And who's getting hurt? You are, especially if you're a member of the middle class. It's all by design, everything. Welcome to the new world order. I mean, I've been telling you this for the longest freaking time. Anyway, it really disgusts me to the core of my being, honestly, that we can't get the truth out of nothing, okay? Out of no one. We have no representatives. We have no government. The Federal Reserve is the government, and I think you are well aware of that. But again, look, my job here, right here, is very simple. It's to clarify what is going on for you and explain these things in such a way that you know what to do. Okay, that's what this is all about. I'm not sitting here for my own health. I'm not sitting here to blab about these things because all it does is get me aggravated, I'll be honest with you, and probably raises my blood pressure. But the truth of the matter is, I do feel a responsibility to all of you because I've been out here for a long, long time now. And to say the least, my track record is pretty darn good. And I've been explaining to you things that would happen before they did. So I'm keeping you ahead of the curve to the best of my ability. With that said, you know exactly how you should take advantage of all of this, people. The central banks of the world are going to continue to inflate on a massive scale. The Federal Reserve is going to achieve a zero federal funds rate, hurt the dollar, inflate the stock market. Crude oil is going to continue higher, pinching everyone here in this environment of inflation. And again, they're going to distract you. It's energy. It's supply chain. It's not the Federal Reserve. You're not allowed to know that. You understand? It's disgusting, but that's actually the way it is here in this new paradigm, this new set of rules that I have warned for a very long time was going to come. Well, it's here now. Anyway, people, that's it. Important video. I outlined a lot of things for you. You know what to do. You know what you should be doing, betting against this debt, becoming your own central bank. Yes, holding cryptocurrencies. They are rebounding. They're not going to zero. So forget about that kind of a narrative, okay? With regard to everything else, you got it. Again, I will keep you ahead of the curve. You will know what's going on if you keep following this blog. And I'm very proud to say that I think I just hit 176,000 subscribers here. And again, I rely on you to get my work out there. I am not on a single social network anymore. None. This is the only place you're going to find me, right here. So if you would be so kind, please give me a thumbs up for this video. If you believe I am telling you the truth or am worth something, this information is valuable, and please share it everywhere, far and wide. Get it out there. Let people understand this stuff. All right, I'm out of here, people. I will see you tomorrow in the morning.